Hi everyone, Nathan here. Welcome to March monthly mortgage update. I hope everyone's doing okay. I hope you and your families are well and you're getting through this challenging times we've got on us physically, mentally. Look, I know it's pretty tough, so I hope everyone's just hanging in there and I can see the light at the end of the tunnel soon. So from me, from my family, look, the wishes are I hope everyone's doing well and everyone's safe. From the finance point of view, look, in this update, I want to cover a few things like what the market is doing right now, what the banks are up to with all the triple CFA changes I've been discussing with you guys over the last couple of months since they were introduced on 1st of December last year. What's happening in the market in terms of pricing, because that's the big topic right now. Are they going to fall? How much they're going to fall? Or are they going to go up? And then lastly, I'll share some exciting news from our office. So let's get into it. Firstly, we've got the market. The market is easing up. It's going from nuts to normal. It's going from a full-on seller's market to now a balanced buyer's market. I still don't believe the news in the media that price is going to crash 20% or 25%. Reality is, look, we've got clients winning auctions every Thursday, which is the big day for auctions. Last couple of weeks, we had record number of our clients that were pre-approved. They are buying properties now. Who those clients are who are buying? Those clients are people who are selling their properties and buying again. So that's sort of our 40 to 45% of our client base that we help on a weekly basis. These are the clients, they sell their property and buy a bigger one purely because they now have child, or they need bigger room, or they need second living room. So I think 40 to 50% of the applications we are doing right now in our office, they're all selling and buying, upgrading their properties. If you bought your home 2 or 3 years ago, many congratulations, you've made that massive capital growth over the last 2 years because the properties there, they went up by 30%. And if you're now selling your home at a still realistic balanced price and now buying in a market which is a lot more cooler, and when I say cooler, to give you an example, a client of mine who just purchased a 3-bedroom first home, so 3-bedroom, 1-bathroom, solid brick and tile home in Hornby on a 700 square meter section, fully renovated home. If he would have bought that property last year in September or August, you're looking at sort of 710, 720, 730 to 740k mark. He has just bought that home for 615. So this is how the prices are adjusting, because some prices were just too high and those prices were never a realistic price. So market is definitely cooling down. However, quality properties in Cashmere, Beckenham, Somerfield, you've got Bishopdale, Redwood, Belfast, and all the other suburbs like Maryvale, Fendleton, Strovan, you've got Pepinoi. The prices are still at a really good level, but there are a lot more sellers now, and the buyers, so see, it's a human nature. When there's a lot of negativity around, you don't feel as excited as buying property as you are when the prices are going up and everyone is buying a home. So quick summary of the first topic, that the pricing is still relatively stable in Christchurch. I'm not seeing any crazy drop of 10-15%. And I think, in my view, the whole year this year, prices will be sort of still stable. And it may sound crazy, I think we're going to finish off this year at maybe around 5 to 7% still high. So prices in Christchurch, I believe, still going to go up by 4 to 5% overall. A lot of properties, yes, they are selling at slightly lower than what the vendor's expectation might be, but there was never a true price in reality anyway. To give another example, a client of mine just sold his section in Kaiapoi. His expectation was 420, 430, because all the sections in Wood End got sold for 450. There was never a true price, and now he's happy to accept 360, 365. So that's the summary of the first part. Now let's have a chat about interest rates. Interest rates, they are going too high too quick, and I'm sorry to say they are going to go actually a lot higher for the whole year this year. You might have heard that a lot of economists are predicting inflation to go high as 7-8%. So what does that mean? 1-year rate can touch 5.5%. Most of my clients, they are fixing their loan for 2 years. So 2-year rate can go 5.5 to nearly even 6%. My view, talking to Tony Alexander, talking to the economist at ANZ, I've had a chat with them, and of course the mixed view is the rate's gonna go up from now until say end of 2023, and there is likely the rates may start to come off in the beginning of 2024. If you're talking to me around interest rate, what you should do, you'll probably know I'm not recommending anyone to fix for 4 years, 5 years. I'm sort of balanced for 3 years, still recommending for sort of good couple of years. If your mortgage is, pretty small, under 200K, I will personally, again, this is not a specific advice to you, this is my own just general view, I'll never fix my mortgage more than 1 year. If my mortgage is less than 250, 300K, I'll always just go take the cheapest rate I can, because technically you don't want to lock yourself for too high and then end up paying high interest rate for like 3 years. I've always fixed my mortgage for 1 year, and because it just works well for me, and that strategy has never gone wrong for me. Now that's just my view. Talking about what's happening with the banks CCCFA, good news is the banks are easing up. So, and all of the banks, they're using a lot more common sense approach rather than just being scared of what's been proposed and what's been put in front. It was actually really hard in December and January. It's probably the hardest I've seen in my career. But the things are easing up a lot better, and the banks are using their common sense approach. And what we are seeing, a lot of our own clients with a lot of equity, they're buying brand new investment properties. Brand new investment properties still makes a lot of sense because you get all the bells and whistles of tax deductibility. The bright line is for 5 years. Of course, you gotta understand and analyze your own personal and financial situation before you commit to an investment property. And I always recommend my clients just ask yourself, why do you want to buy investment property? Just because it sounds good on dinner table, you don't want to invest in a property. You just really take professional advice. Where are you buying? That's quite a big thing. I'm not a big fan of spending so much money on a 2-bedroom place with no car park, 1 bathroom, because technically if you ever go to sell that townhouse, who's going to buy? So if you are buying townhouses, awesome investment. I've bought one in Eddington myself, but that's a 2-bathroom, 2-bedroom, both with en-suites. It's got a car park, so you're buying something at a realistic price, not at an inflated price. Or a lot of my own clients, they're buying investment properties in North Canterbury, because the prices in North Canterbury is a lot cheaper than Selwyn, probably around 100 odd K. A few of my clients, they're buying investment properties brand new in Ashburton because 650 will buy you a 3-bedroom, 2-bathroom, double garage on a 600 square meter section and a solid 160, 170 square meter home. So you can still buy that for 650 in Ashburton. So lots of good opportunities around Christchurch. Just got to make sure that you're not paying overpriced at the moment. Lastly, and exciting news for us, look, we're very exciting with all your help, support over the last 4 years. We have officially bought Loan Market North Canterbury business. One of our colleagues, Ellie Poppenhagen, she was operating in North Canterbury for the last, 10 years. She's retiring, and she's passed on that responsibility to us to look after her clients, and we'll definitely make sure we'll look after everyone the way we look after all our other clients. So that's an exciting part, that we are expanding in North Canterbury, and our senior team members, Scott Carragher and Agnes and myself, will lead this acquisition. Elena has joined the team officially. She's come from Kiwi Bank. She's worked in Kiwi Bank for the last 5 years as a branch manager in Papanui. She's just joined the team as a mortgage advisor, helping us still deliver the same level of service and commitment to our clients as we were committed on day one. So thank you so much, everyone. Look, it's great to be able to share that sort of stuff, what's happening in our office once a month with you guys, because whatever we are, whoever we are, wherever we are, is only because of your help and support. So thank you so much once again, and I look forward to catching up with you and give you updates for what's happening in the market in April. Thanks very much.